Good morning, everyone, and welcome to the On Time, On Target Morning Brief. It's good to be back after a couple of days out. I appreciate the kind words there in the chat already. Yes, good to see all of you again after not being on air for a couple of mornings. So Friday was the last time we talked. That was kind of the, hey, what's going on in the market? Let's really take a step back and look at, the sell-off in tech. Is it a good time to buy? I did some buying Friday. That's why I put that video out and sent it out to the a larger audience, if you will, that's out there. And then, yeah, sure enough, we had that huge bump up on Monday, kind of retraced some of that yesterday. So we're going to talk about tech a little bit. Again, I'm not worried. I think this will turn out to be more of a buying opportunity long-term than it is a time to bail on the entire industry that gives us the highest margins out there, right? So with that, obviously, a couple of you know I have COVID now, had it. I think I got it from the stupid vaccine shot, but I've had both vaccines and now I have the COVID to go with it. So pardon the cough. Again, we'll probably be dealing with that for the rest of the week and then should be good to go from there. For those that are interested, none of the rest of the family has it. So far, so good on the family front. But yeah, working from home is awesome. Working from bed is not nearly as awesome, even though it's been a couple of easy days in the market to be able to do that. What we're going to talk about today is this weekend, Warren Buffett, obviously greatest investor of all time. You could argue that, I guess, but most people would consider that to be true. He has his annual meeting once a year where he puts out his guidance and basically says, to summarize everything he said over the entire weekend is don't bet against the United States, which again is what I have said. If you rewind back for a year of, COVID hits, and again, is COVID going to win, or is team human race going to win? And obviously, I thought, during the sell-off, we had the big sell-off in March, losing 7%, in the first few minutes of the morning, getting stopped out. I mean, it's crazy times when you really think about it, historic times. Well, when you peel that back, once the market starts selling off like that, you have to ask yourself, zoom out, how's this going to end? And is COVID going to win, or is the human race going to win? Same sort of mentality when the market starts to sell off, which, last week was not, people are asking me, hey, what's causing the market crash? It's like, well, we probably have different definition of crashes if you think this is a market crash, but it certainly is selling off to the tune of, 5-6% in the NASDAQ. Well, with that, you kind of say, okay, well, what's going to happen in the long term, right? Obviously, we're caught up in the emotion in the short term. There's headlines out there, like Apple or Buffett sells out of Apple. He sold 5%. They didn't say keeps 95% of Apple, right? They say, sells 5%, and everybody comes unglued. Well, then this weekend, you have the, Warren Buffett's talking about Apple still his number one holding, greatest company in the world. Everybody's like, oh. Maybe that wasn't a fire sale to get out of Apple when he trims 5%, right? So you get caught up in the headlines. So if you zoom out in what's going on with tech right now and say, okay, well, yes, tech is selling off. It sold off last week and had the huge move, 3% up in the NASDAQ on Monday, and then sold off again yesterday. Where is tech? Is tech dead? Right? Is this Elon Musk guy wrong when he says, AI is the greatest threat to mankind? No, he's not wrong. We're going to continue down a heavy tech path, maybe to our own demise. You're right. I mean, if he's right, but the thing is, where are your high margins? What's making us more efficient about what we do? Well, that's technology, right? So that's where you're going to make a lot of money in the long term. So all you're really trying to do is manage your entry point on things like technology when you get a sell-off, which is kind of nice, right? Some of these company names come down a bit so we can get into them. So that's what we're going to talk about today. Pretty long in the open. Sorry about that. If you have the chat window open there, you can see I've got a few longs in there, not in love with them. I'm not going to trade today because my brain is not the sharpest right now. So no trading for me, but we'll take a look at some things. We'll also look at the short and Rocket. Again, it moved up 72% yesterday. They were talking about it this morning. Again, it's a mortgage company. Can it really have changed 72% overnight? No is the answer. So it's selling off today. Just that's more a reversion of the mean than anything against the company, but it's the number one short out there. And then, I haven't seen Prayers talking about the documentary Terminator. I haven't seen that, but I do agree that it was and if you don't follow Elon Musk on Twitter, it's worth a few seconds of your time. It really is. But when you think of, he says the issue, as long as humans are fixing robots, as long as humans are the ones physically making changes and doing maintenance on robots, we're fine. It's when robots are doing maintenance on robots that's marking the end, and then we need to really think about what we're doing. So I guess if you relate it to like the nuke thing, nuclear bombs, if you talk about kind of the origin of the bomb, we didn't have bombs years ago, and then you started making bombs, and it's just like, let's make them bigger, let's make them bigger, let's make them bigger, and all of a sudden we have nukes, and it's kind of these take a step back of, ooh, what have we done? Team human race, let's think about it. I know we have differences, but let's think about this. Let's now make them smaller, right? So kind of the evolution of the bomb was these huge nukes that kind of peaked out, and now we're coming back. In AI, same sort of thing. Great idea. And then it's like, ooh, we better check this before we go down a bad road. So anyhow, longest open ever. Sorry about that. But again, if you're catching this on replay, I do have a couple of new pucks up here. We'll talk about this top 100 FA thing. I got an accolade. We'll talk about more about that when we have more time. But if you're catching us on replay, thank you so much for checking us out. I'm not normally this long-winded in the open, so we'll get down to some actual things that are going on here in a second. And if you want to join us live, it's $25 if you want to come out and see us. With that, let's go ahead and get started. I will get rid of the video today, and we will hop right into TD Ameritrade. I'm coming off camera, and we will take a look at, actually, let's look at our lineup card for today. A little bit out of order. Again, brain's not functioning as sharp as it normally is. All right, make sure you have your chat window and Q&A window set up appropriately. Standard disclaimer applies. You have to do your own due diligence before you act upon anything you hear in this presentation. This is a financial education presentation, not targeted financial advice. You can read full disclaimer information at ototnow.com. All right, mission objectives: grow our money, protect our money, live off our money. Again, we're going to talk about mostly growing our money. We'll talk about Warren Buffett, his annual meeting and guidance. And then lastly, I'll close with what is a solo 401k. For those of you out there that have your own business or you're considering your own business, I want to talk about this option I've previously used with my own business, SEP IRA, self-employed IRA. Thanks for zooming in. Why is that doing that anyway? But anyhow, I'm going to switch to the solo 401k, gives you a little more options. For the flow today, long, short, open, short, long, market review, headline reviews, that's standard. We will take a look at BRKA and B, as well as Apple, since those are all Buffett things. And then the rest of it is standard. We'll get off of that screen and go over to take a look at the 9-month review on the SPY, which again, you can see here. And the most important thing is, even with the recent volatility, we are still in an uptrend. It draws these channels. I didn't draw these. These are AI. They're, speaking of AI, driven uptrend there. So yeah, we're in the heart of this channel on the way up, even though we've had some red days, even though yesterday's a red day. You zoom in just a little bit on the 5 days, you see a lot more volatility. Again, this was the big move up on Monday. A lot of volatility yesterday. Market kind of didn't know where it wanted to go. And then again, went gapped up overnight and then has been selling off into the market open. And here's how we'll be set up for the actual market open today. All right, coming up to, excuse me, CNBC. Here's where we are. We'll refresh this real quick with the futures down a little bit, and again down 0.6 in the NASDAQ for tech. Europe is up across the board. Asia up across the board. Here are our numbers yesterday. It's not showing them. Bonds 1.46, so it kind of chilled out on the 10-year, down from the 1.6, which was kind of causing that spike. Oil steady above 60. Gold and silver sold off a pretty decent amount there in silver. And then Bitcoin back above 50,000. So I know a lot of you are tracking that a lot closer these days. I've kind of drawn that line of below 50K. You can buy it, above 50K don't. So we're back above that now. Will it drop back below? I don't know, probably. This is one of these things when you're looking for an entry point, don't just close your eyes and buy, just draw a line and then wait for your entry point. You can even put in a market order in. Again, we use GBTC. All right, going back to the headlines out there. Did get a jobs number in there that was short of expectations. That's probably what's causing the red in the market today. Here's our rocket. That's the short I have in the room for today. 70% irrational pop. You see the little Wall Street bets thing. I don't know if you have, for my younger folks in the room that may be following the Wall Street bets in there, chime in the chat if you actually see if they're talking about rocket this morning. I would be curious about that. Excuse me. Wealth tax foolish. Yes, I don't know what Warren Buffett said about the wealth tax this weekend. I will have to look that up. No, not letting you short rocket, huh? In TD Ameritrade. Again, TD Ameritrade's not as good as Schwab for sure. So we probably need to make the change there. It's time. Instead of waiting. The two companies merged, but we shall see. All right, one thing I want to show you real quick before we go to the open. Here's Berkshire A. Obviously, it's 377,000. Oh, there is the open. So we'll get caught up here in a second. 377,000 as far as one share of Berkshire A. So I don't recommend that, right? But when you look down at, you get the full amount of, the PE ratios are pretty reasonable for especially such a big company. And of course, it makes money. Nobody's going to short Warren Buffett. So it's kind of one of those just buy and hold sort of things. The BRKB is how you should, or I should, until you get up to where you can, I'd say in order to pay $377,000 for a share of something, you probably need a 10 million, an 8-figure type portfolio. So if you're there, congrats. If you're not, if you're still working on that, then yeah, I would say BRKB is the way to go. Again, more commonly owned, but again, it's a different type of class of share. So if you're to get the full information, you actually have to flip over to the A shares, but pretty much mirror image it across the board. And of course, his number one holding is Apple, which you're all familiar with. We don't need to take a look at it today. All right, let's go over to, so BRKB, if you want to own some of that. I don't personally own it now, but I may. Need to take a harder look at that. Okay, let's go over to TD Ameritrade and check it out. We'll put our longs in here first. XL gapping up. That's again a fleet, an EV fleet, truck fleet. They have a big contract. The next one is CHPT. ChargePoint Holdings, big contract as far as merger. They just got bought by somebody. So again, they are in play. You can see not normally a huge volume, but a bigger volume than most. And then FedEx is obviously in the news talking about going to an entire EV fleet. Market's not liking that actually, because again, that may not be the most profitable move. And, the folks that are out there that buy a Tesla, it's not, if you take the total cost of Tesla ownership, and feel free to push back in the chat because I know there's some Tesla owners out there, you're not certainly saving money, and I'm not sure you're saving the world either. I mean, I like the concept, right? But when you break it down to dollars, I think, it's probably more expensive. It's probably more expensive to own a Tesla outright than it is a regular type vehicle. And again, I know it's all over the place, but certainly at the price point, the electric vehicles are out there. Now, I guess if you get down into the Prius and some of the lower end EV names, you could make an argument that it is cheaper out there, but certainly not in Tesla land, in my opinion. So the reason I say that is if a company comes out and says, hey, we are going to have an all EV fleet, that may be an increase in operating costs versus a decrease in operating cost, and which drops to profitability. Doesn't change revenue, but it changes profit, right? Which is what you care about as a shareholder. So that's why I think FedEx is in the red on the news, but not significantly, right? And let's pull up Rocket. We know you can't short it in TDA. Looks like it would not have worked initially anyway. Your entry point, though, after something peaks like this, is here on the way down. Looks like I kind of missed it. It would have been in this 38 range. You wait for the profit taking for it to go up. And then even if you took it here, I'm not doing this myself because my brain's not working as much, but 38, 30.78, again, you want a 50 cents. You'd no way you'd be able to cover the high of the day, but this is where you would get in there and scalp this basically. So you'd enter at 37.8 that we talked about. Again, arrow down, and you're basically going to hold it for your 3R trade. Let go. Not letting me do it. Sending out arrow down there. Try one more time. Yeah, it's about at the exit point anyway. All right, not going to let me draw. So 37.8, 37.3 is your first R. 38.8 is your second R, and then it looks like it just got stopped out. 36.30 would be your exit point. So you're almost at the exit point for your 3R trade. Let me draw horizontally. This is weird. Make sure I got my math right, since the brain is slower than normal. So yeah, it's almost that. And when something gets stopped out like this, and again, it's the move from 39.2 to 36. I would market order actually into this right now and exit the trade. So, and call it a day. Maybe it pops out of the being halted. It should be halted. I think it's 7 minutes. Anyhow, maybe it pops down and you get a little more than 3 on your exit, or maybe it hops up and you get 2.6 or whatever. But anyhow, I would market order out of that, if you will, trade. If you got in, you probably didn't, because I kind of just called it off the fly there. But we'll come back to that to see when it opens and how it opens there. Okay, overall, let's take a look at what's going on in the market and different things out there. We have the Dow is up, the SPY is up, and the NASDAQ's only down 0.10%. So it looks like the market came in. Come back on camera here. Looks like the market came in initially off the jobs number pre-market, and it is bouncing pretty good going into the actual open. When you look at the upper left-hand corner here, you got Clickstream up. GBTC is again we'll kind of see where that is, GBTC. So again, when I say 50,000 in Bitcoin, I really kind of loosely translate that to 50 in GBTC. So again, here's where it's hit it a couple times and kind of sold off. Kind of a buy below 50. But once it gets above 50, you got to kind of let it go and do its thing. It roughly relates to, if you time this by 1,000, to the price of Bitcoin outright, but not a one for one for sure. So, but it's on the way up. DraftKings has been on fire. Wow, Kathy Wood said she's basically all in on DraftKings, and crazy pre-market up to 73. I've got some calls in here at 70, which now I have to move up higher. But basically, look at this. I mean, it hit earnings. What is this? Tuesday, Wednesday, Friday. So Friday morning, it had earnings. Screamed higher Monday, obviously, with everything up with tech, and even managed to hold its own yesterday. And it's bouncing above. So probably actually need to look at doing some more trimming in this position. We've been in this position since $20, $15. I don't even know. That's good. The good that I don't even remember, but it was a SPAC from last year. Can it continue higher? Sure, but it's getting a little frothy up here. Tencent Holdings, Boeing's bouncing nicely despite losing an engine. This has been kind of remarkable. It's still up at the 230 range. Right, I don't remember what day it lost the engine fell off of the jet, but it was in here somewhere, right? But you have bad news like that, and it's the 737 max all over again. And then it hardly even was affected by that. So it's not the 737 max all over again. An engine fairing came off. So all right, so lots of names in the green there. See what's in the red. Fubo TV has been, that's just crazy because they've been on fire. I don't necessarily like this name personally. but I do have a couple of investors that insisted on it. So they beat earnings, even though they're losing $2.47 a share. It's in green because they beat earnings there. So anyhow, selling off pretty hard from close up here at, or tell exactly where the close is in here, but certainly selling off 13%. And it's got a little more downside to go, I think, for Fubo TV. All right, some therapeutic names. CRISPR, you're familiar with. Genomics, Trade Desk selling off again. So kind of all over the map on both big green and big red names. You mentioned Luckin Coffee. You know what, in the point there, let's see, there's some stuff going on in the chat from Predator. Yeah, Kathy Wood, so ARK Investments, she's the chief investor. She's the hot hand right now, right? And she publishes what she's doing every day. So it's beneficial because most folks don't do that. And I don't think she will forever because I don't think there's any long-term gain in publishing your exact moves every day. But anyhow, she feels confident and is doing it. And so far she's been right on almost everything. But yeah, if you get her stamp of endorsement, your company goes up 10%, right? So you're right. Luckin Coffee it'd be nice if they got on a radar scope. Yeah, I see the comment there that for those that can't see it is, engines falling off is bad news for Boeing, even worse news for people actually on that 737. So now here's 2,600 hours and 2 decades of aviation experience. We don't design things to where an engine failure is a big deal. So now I'm sure folks were excited, and yeah, I'd be a little excited too if you saw there was the video of it going around where somebody actually caught this big flaming engine as it's basically crapping itself. But having flown multi-engine airplanes my entire career, except for just a few hours, you lose an engine, it's concerning. You're done for the day, but airplanes fly just fine on one engine, just fine. So yeah, even though you don't want to see that, it's not. There's no actual concern for loss of life or loss of airplane, but I'm sure everybody got excited. Let's see, what else do we have here? Cost of vehicle per month is more expensive for an EV. This is by a confirmed Tesla driver here in the chat. All the driving I want per month has increased my electricity bill by 25. That's not bad. Extra 200 per year to register. I didn't know about that. 100 for a hybrid. But the acceleration, the technology is fun. Kids love it. So yeah, so I mean, save the planet, but you're paying more, right? So, are you saving the planet? I don't know. The gigafactory here in Texas is flipping huge. I'm not sure the building that is saving the planet. But if it makes you feel good about yourself, then knock yourself out. It was about 10 to 15,000 more expensive than a Camry or Accord, depending on options. So again, a Tesla owner here testifying that it was 10 to 15K more expensive than a cheaper EV model. So if you want to save money, blah blah blah, you would go with a cheaper model, not necessarily a Tesla. So Apex, or Predator, I do appreciate you throwing that in there. Okay, last thing I want to close with. Let's see if oh yeah, here, let's look at Rocket real quick. Let me share that back out so you can see it. I think I just did. Or we're still there. Yeah, so you saw Rocket open back up and then fall from grace. So again, I would have marketed out. So I would have gotten this price here at 36.3, which would have been an exact 3R type of trade. If you held any of it, though, you were certainly getting paid. So if this was 3R, then that's about 6R, 7R, maybe 8 touching at the absolute lowest. So anyhow, good trade there in Rocket. Again, did not take it personally. And again, you couldn't take it in TDA. All right, let's go to the solo 401k and we'll close out for the day. Okay, so a SEP IRA. So big picture, if you have your own business or you're looking at either never working for somebody else, for some of the younger folks that are in the room, good on you. If you're if you are cut out for the entrepreneurial life, there's huge upside. There's more risk. It's like owning an individual stock. There's obviously more risk, right? If you screw up your business model. And that's why for those that are studying business, all of those courses that you either have taken, for those of us sitting here with MBAs, or will take, all you really need out of that is you need to be able to examine a business model. Okay. And I will say the same thing applies to when you look at investing. When somebody's like, hey, why don't you buy American Airlines or use Southwest, because I would consider them best of breed. Why not buy Southwest? Because their stock is low, and then hold on to it. It's just like, well, here's exactly why. The business model sucks for airlines. It's not something I want to be any part of whatsoever. I don't really care what the stock price is. The day I bought it, I would be sitting there staring at the screen going, please pop so I can sell it. Right? That's trading. I don't want to do that. So the business model of an airline is you have this huge capital expense, right? Meaning you have to own a bunch of airplanes. You have to pay airports to operate in, you have to buy these parking spots. You have a fairly expensive, trained workforce. Airline pilots are not cheap. Even flight attendants are not cheap because they have to be trained. There's safety. They got FAA rules. All this money goes into these folks to be able so they can safely get you into A to B. And guess what? If they don't fly for 3 days, they're bankrupt. It's like, what the heck kind of business model would you even want to have anything part of that? So if you're a young entrepreneur out there, if you're like, hey, I'm gonna start my own airline, that false, dumb, right? Dumb, don't do it, blah, blah, blah. Now, to sell a t-shirt that you can buy for $3, screen print it for $4 and sell it for $10, you've got a better business model right there already. You can sell it for 10 to 15 bucks. There's another 100 to 200% on your, margin. It's just like, boom. Or go online, have a YouTube channel, get enough viewers to where you actually have advertising. Sell a software courses and things online that are 100% profit margin. There are much better business models out there. So if you're going to business schools to do your own thing, understand the underlying business model. So if you remember nothing else, remember that. But for those of you that do go out, either leaving the corporate world like I did, 2 decades working for the man or the person, not to be gender specific, but, serving somebody else to go out on my own. What you don't have as an entrepreneur is this 401k thing, which a company, where you can take your money and save towards retirement. I know you're familiar, but as an entrepreneur, you do have options. The self-employed IRA, the SEP right here, SEP is what I had been using, but I'm going to switch to the solo 401k. And here's why. They both allow small business owners, highlight this here, both allow small business owners to establish retirement accounts for their employees. Well, you have to take care of yourself first. That's not greedy. Okay. If you're going to run a company, you do need to make it worth your time first. Your employees have to be second, right? You can serve the greater good in society, but you have to take care of yourself first. You can't make your employees rich and wealthy and take care of their retirements and fail on your own, because then the business fails, right? So you do have to take, and that's okay. Take care of yourself first, make a lot of money, or at least get your business model to where it's hitting before you can hire others and then start making them wealthy for joining you. So funded by SEP IRAs are funded by employer contributions. Solo 401ks allow both employer and employee contributions. This is why I'm switching. This allows me to basically max out both. If you are in a traditional employment, say you work for a government contractor and you're maxing out your 401k, and then you start a side gig, you're selling those t-shirts I was just talking about, you can't put any more employee contributions in because you're limited across all your 401ks, right, to the one amount. But you can, so therefore it wouldn't make a difference for you. But if you are not working a traditional job where you're maxing out your 401k, then this would be kind of your best bet. And that's the case I am. I have a small 401k for some gig work I do for ESPN, but I don't make the max in an entire year, so I can't max that out. So this is going to allow me to switch. Also with a 401k, you can have a Roth option. So I would rather pay my taxes now. I call it the, eat your vegetables first. I prefer to pay taxes now under the current environment than the future environment, which I just don't know what that is. And plus, I don't ever intend on really not making a lot of money. So I'm not going to have that traditional cliff where at 65, I step away from working for good and sit on a beach somewhere for another 30 years. I don't view that as my retirement. So therefore, I don't think I'm going to get a bunch of tax savings by a reduced tax bracket in the future. Everybody's situation is different, just something to think about out there. All right, let's clean up the chat here a little bit. So yeah, Airlines, I booked a bunch of flights for volleyball, so flights are pretty cheap. I agree, they're a commodity. There are ways to, if you've flown Spirit Airlines, you are certainly taking, nice. I agree that it is a commodity unless you go low end, then it can be kind of scary. Yeah, Spirit's probably about as low as you need to go out there. Allegiant's another one. It's a little different experience than flying on a Southwest versus flying on United, but I view it as a commodity, right? And then yes, thanks Predator for those kind words. That other beachgoers agree that I shouldn't sit on the beach from age 65 to 95 as well. So with that, I'm shocked my voice, thank you for those kind words. I'm shocked my voice actually made it all the way through today's show. So thanks again for checking in. Pretty much a full room, even though folks are kind of quiet this morning. With that, we'll see you guys all back tomorrow.